Got that Q2 earnings number out of PepsiCo this morning, a revenue beat, stocks up in the pre-market. Our Sara Eisen's here at Post 9 with more on what turned out to be a pretty good quarter.
Good quarter, punctuated by 4.5% organic revenue growth. We welcome now, as always, Hugh Johnston, the CFO and Vice Chairman of PepsiCo. Welcome back, Hugh. Nice to see you.
Nice to see you as well, Sarah. Good morning.
So you've really turned up the growth notch over the last few quarters, and it's a standout in staples and especially among food. What's driving it? It's broad in portfolio and in geographies.
Absolutely right. It really is very broad-based. I think we're seeing terrific results out of our Frito-Lay North America business. Have seen a real acceleration there. North America beverages clearly doing better, and all of our international businesses performing well. Developing and emerging markets growing about 8%. I think a couple of things are driving it. Number one, we're investing back in the business in the form of advertising and marketing behind our brands, and in the form of selling capacity to ensure that we get good execution out in the marketplace. And as a result, we're seeing very quick responsiveness. What I think is just as important, though, is we're actually not just investing to grow faster right now, but we're investing to be stronger over time, whether that's in manufacturing capacity or digital capability. So we really feel like this is a sustained higher level of growth, not just a higher level of growth for the moment.
Wanted to ask about Bubbly. It's specific, but it's brand new. You guys just launched it last year. Ramon Laguarta, your CEO, just said on the call, almost $1 billion brand. I mean, what does that show in terms of where the growth is for consumer companies and what you need to be doing to really home in on what the consumer wants right now?
I think that's exactly it. I think if you do good, high-quality research and understand what the consumer really wants, and then you do some terrific marketing. I mean, the brand personality that the team has created there is one of the best I think we've ever done. The flavors that have come out of our research organization are terrific. The execution by our field organization has been so good. And, you know, this year we'll probably do upwards of close to $300 million of business for something that didn't exist a year and a half ago. And as Ramon noted, we think this could be $1 billion plus business for us. It's at about an 11% share of the marketplace right now, and we're not going to be satisfied for a long, long time. We see a ton of growth, not just in the U.S., but globally for that brand.
You, Jim Cramer, always good to see you. It does seem that the analysts have lost control of how to value your company. They thought that Quaker Oats would be bad. Quaker Oats was very good. Some thought that soda, that carbonated, was going to be bad. It clearly wasn't. Others seem to miss the channels entirely, whether it be dollar store, whether it be e-commerce. Do we have to find a new way to value PepsiCo? Because I cannot believe a group of analysts being more wrong about your company.
Thank you for the kind words, Jim. You know what? The analysts eventually, I think, will catch up to the potential that we have. There's a tendency oftentimes to aggregate companies in the consumer space and to look at them all in the same way and through the same sets of lenses. I think for PepsiCo, we have a unique set of categories that are convenient, that are fun, and that are very much on trend with consumers. And we have a set of geographies that are really a good blend of developed geographies and developing and emerging geographies. And as we look at the opportunities with what we have right now, we see just limitless growth opportunities out there. Per capita consumption on our products in developing and emerging markets is relatively low. Our ability to expand and premiumize our products in developed markets is really just nascent. And the capabilities that we're building in digital to be able to connect with consumers and customers so much more effectively than we have in the past, we feel like we're just scratching the surface, and we feel like we're in the early innings of what's going to be a very long game for PepsiCo.
Hey, Hugh, my ears perked up when you said the flavors that have come out of our research organization. I mean, what can you simplify? What are we hungry for right now?
I'll bet you're hungry for something flaming hot, because it seems like anything we put flaming hot on, we can't make enough of it. Flaming hot is just a phenomenal. Exactly. So flaming hot is good any time of day as far as we're concerned.
Hugh, you mentioned you saw growth across international geographies. Always like to get a read on consumer spending, both in the U.S. and international. We hear constantly about the global growth slowdown, constantly about recession risks rising. What are you seeing on the ground?
Yeah, here's what I would say. In the United States right now, we don't see any sign of a consumer slowdown. I think consumers are healthy, and particularly with our level of products, we represent little treats that really make people's day better. So wherever I look around the U.S., whatever geography I look in, it seems like the consumer is in a pretty good spot right now and willing to spend on our products. One of the things that's particularly positive is gas prices are relatively neutral year over year. And when that's the case, consumers generally feel better about themselves. As you walk around the rest of the world, obviously there's a few spots that are challenging. The Middle East is a little bit challenging right now. Brazil has had its ups and downs a little bit. Western Europe has obviously gotten a little bit slower. But I think if you really take a big step back, overall, with interest rates as low as they are right now, there's reasons to believe that the consumer economy is going to continue to be a good economy around most of the world.
Hey, Hugh, I'm confused about Quaker. The division that the sectors of that whole mosaic that are doing well seem like they're traditional pantry names. I thought that the millennials didn't like pantry names. How do you explain the acceleration there?
It's funny, actually. As a part of our investment strategy, we put money behind Quaker, not just the Quaker oatmeal, but all of the Quaker businesses. The ready-to-eat cereal business, the rice-a-roni business, the Aunt Jemima pancake business. And you know what? There's still a good-sized consumer base out there for those, and a little bit of money reminding them that these are great products and they're great to gather the family around. We've seen a lot of growth across the board. I mean, Aunt Jemima is growing nicely right now. Rice-a-roni is growing nicely right now. So I think a lot of times with these smaller consumer brands, they get neglected, and when you just give them a little bit of energy and a little bit of money, they go right back to growth again.
Hugh Johnston, we appreciate your time on Earnings Day, as always.